Hi everyone. So this morning I wanted to speak on the subject of Silicon Valley disaster. Now, the first thing we need to know how the banking system works. While you think the entire money in the bank account that you put is sitting in that bank account, that's not the reality. Only 10% of the deposit amount keeps in the physical account and rest of the money goes out there to make more money. Point being taken, let's say you put $100,000. In reality, only $10,000 sits in that account. Rest of the money has to go out there and make more money in form of bank accounts, loans, mortgages, bond selling, stocks, all those things that the company has as a product under its umbrella. Now, bigger the bank, shorter or smaller the reserve, and more risk they have because they have more products to take care of, depending on the management and structural market cap of the company, they have to keep very minimum reserve so they can go out there and invest more in the market to raise more money. Now, has that been happening since COVID hit? No, it's been very challenging to recover money from the market. What happens in such situation where your money, that's only 10% of the money, is sitting in the account, and rest of the money which went out in the forms of loans and other product has not been returned to the bank? So that means the bank is going through a big loss, and they have to make payrolls, they have to make the other loans going when people appeal, and they have to keep the system going. How do they pump the money inside the system and keep everyone motivated? They dig into their bond reserve and the 10% reserve that I was talking about. That means the structure of the capital is now been attacked. Eventually, when the word spreads out that the bank is looking to bail out or looking for more funding and digging into their bonds, then everybody who put the money in there will go out in a mass panic, try to withdraw the money. This is what happened. But there is some more elements to it that is very subtle. One of those topics is the bond they're selling. Now, these banks thought they're doing a wise thing to purchase bonds at a very low interest rate during the COVID time. Low yield interest bonds. These are government bonds. They are 100% secure. Let's say you have to put it for 10 years and you get a decent amount of interest on it. It's not that high. That's what the situation was when the banks purchased these bonds from the government back in the COVID times. Now that they're bailing it out, recently what happened is the government has pumped out more money for the interest rate hike. So the market have a little bit fluidity during the recession and the inflation time. People learn to have that different kind of lifestyle. Well, the tax will be a little bit higher and all those things changes, even the service level. So all these going on, the bonds purchase price that the banks had, right now they're selling in a much lower interest rate than the people who are buying bond in today's rate, because the rate has increased. So they're losing money, they're bleeding money technically out there, and it's not a small balance sheet error, it's $20 billion. Yes. Now when you have such flaw in the system, what they have to do, the next step, they even dig into that 10% of your reserve that you put in, that $100,000 as an example that I was talking about, that 10,000, right? So now that's the last attack, and words start to spread out that they're digging into their reserves, selling their bonds in a low rate. That means they're truly desperate. And the bank decides to answer by saying, don't panic, we just need a little bit of funding, so we'll get back on our feet. Just have faith on us, don't withdraw together, don't mass panic. This is exactly what happened. Everybody went in there because they wanted to release their payroll, and now the bank has collapsed. The FDIC have to step in. The government has to bail them out. Eventually, this is what happens because We don't want to create a mass panic in the normal constitutional understanding for everybody that our money is safe, while we boost around saying this big banking system is great, but is it really? Do you think your money is safe? What do you think you should do with your money this year? Make more assets. That's not debt. That's not intangible. Buy more assets that's tangible. And minerals, silver, gold. These are unique commodity that you can use as reserve, and any point of time when the system crashes and a change of money happens, like the form of money, it's an exchange after all. So then you have something that is a globally accepted form of money. And a very important thing to keep in mind, while this year we are actually trying to make amends with a new knowledge about different point of views for money handling. Money market is going to be crucial, so make wise decision. Choose regional banks. Don't go after the big names, because the bigger the bank, the reserve could be attacked anytime depending on the collapse, and there are more coming in, so your money could be tied up. If you want liquidatory access for your accounts, there would be a wiser idea for a regional banking to be a choice for a separate bank account. Also, more asset buildings that's not debt building or taking liabilities over, like expensive car purchases and insurance and whatnot that comes with it, or home purchase would be a very expensive deal at this point of view. But land and bond is also a better choice right now. Mineral purchases such as silver and gold is always a good idea, and as always, cash is king. So stay wise and stay properly educated about your money. Know your money's worth, invest wise, and downsize as much as you can for the next 2 to 3 years to handle better decisions for your retirement. All the best, and I hope this helped. Have a wonderful day. Cheers.